All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2023 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. During this webcast, we welcome Zomedica, ticker symbol of ZOM on the NYSE, and their CEO, Larry Heaton. Today, I've asked Larry to run through the company's slide presentation, and if time permits, we will engage in a short question and answer session at the end. Before I turn it over, I want to remind everyone that management is available for one-on-one meetings later today. If you've not already signed up and would like to do so, send me an email at Blum, B-L-U-M, at lythampartners.com or visit our website, lythampartners.com/virtual. Click on the one-on-one meeting request button and we'll look to get you taken care of. So with that said, Larry, let me turn the floor over to you to walk through the presentation.
Thank you, Robert, and thanks for the opportunity to present today to our shareholders who may be watching via webcast. We thank you for your support of Zomedica. As Robert mentioned, I'm the Chief Executive Officer, and we are traded on the New York American Exchange under the symbol ZOM. Some of what I'll be saying today could be regarded as forward-looking statements, and so I encourage you to review our safe harbor statement. So if you're considering an investment in Zomedica, these are the highlights. We operate in a very attractive, large and growing market that appears to be recession resistant, if not recession proof. Into this market, we introduce innovative diagnostic and therapeutic technology to impact favorably the quality of care of the pet and the practice economics. We've built over the last 19 months a very experienced management team that is focused on executing, producing gross margins of 70% for the first quarter and for last year. We've grown primarily by acquisition over the last 19 months, and not just acquisition for the sake of it, but acquisition to be able to grow. And we've had significant growth on a year-over-year basis over the previous year. We continue to maintain a very strong balance sheet, which provides us with the resources to both build organic growth as well as to continue to grow by acquisition. Those acquisitions have resulted in us commercializing currently 4 product lines, and we're on the eve of a launch of our 5th product line here in the second quarter. The animal services market that we compete in is huge. Worldwide, over $100 billion currently. In the US, over $60 billion. Therapeutic devices and point-of-care diagnostics, what we specialize in, are a key part of the veterinary services segment. And we see that this is not only a very large market, but a growing market. During the pandemic, over 20 million Americans brought new pets into the households. And these pets weren't older dogs and cats, but puppies and kittens. And so while today they present an opportunity for vet services from a standpoint of well patient visits, as these pets grow and as they age, they'll be going to the vet in increasing numbers. And really, they become part of the family. In fact, there are a lot of things that pet parents would give up before they would not take their sick or injured pet to the vet. And so what you have is a large market that's growing considerably, that has legs in terms of growth, and appears to be recession resistant, if not recession proof, especially if you're dealing like we are with products that are to treat sick or injured pets. All of these are very great factors for a business like ours or investment in the animal health industry. They present some challenges for the veterinarians, though. First, a little context. If you remember back 5 or 6 years ago, when you went to get your heartworm meds or your flea and tick meds, or in fact, any prescriptions for your dog or fancy food, you bought that from the veterinarian. But today, you're likely getting it delivered every month from Chewy or Amazon or Walmart, or you're going to Petco. And all of that has created a sort of a gap in the income for veterinarians that's been dating back for about 5 or 6 years. And so vets have a gap that they need to, in profitability, that they need to fill. And yet their problem today isn't so much that, but it's staffing. During the pandemic, many had to close, and then they came back, and not all of their staff came back, just like every other industry. And now they're competing for new staff And they're competing for that staff with McDonald's down the street that's paying $15 an hour. And the vets want to pay more in the range of $12 an hour. And if they have to pay more, remember that gap in the profitability, that affects them there as well. Many of them have given up. About 40% of independent vets have sold out to corporate groups, which is good for a business like ours because we can talk business to them. But if they want to stay independent, they need to not only do the things they love to do, which is to improve the quality of care for pets and the satisfaction of their pet parents, but they also have to pay attention to their business. And that's where we come in. At Zomedica, we're bringing innovative diagnostic and therapeutic technology to veterinarians to help them do the things they really love to do, take care of the pets and satisfy the pet parents, but also help them do the things they really need to do, which is to improve the workflow, cash flow, and profitability of the practice. To do that, we've assembled a very experienced management team. I'll point out just the three in the middle, because each of these three individuals came to us as their companies were acquired by Zomedica. The founding CEO of our first acquisition, Pulset, runs sales. The founding CEO of Revo Squared, with the microscope that we're about to launch, runs imaging. And the founding marketeer at Assisi runs marketing. We have grown, as I mentioned, primarily by acquisition. We started with the TrueView product line, which is our legacy product, and then we sequentially acquired additional products. And as we did so, our focus was on the annual addressable market. What is the total annual addressable market from a consumable standpoint? And as we have continued to make these acquisitions, we've now built that to $2.5 billion. In addition to that $2.5 billion in annual recurring revenue opportunity is the opportunity to sell over $1 billion in additional capital, because while all of our products have a consumable or recurring revenue stream associated with them, some of them, PulseVet and VetGuardian, also represent capital sales. To bring these to market, we've developed a very diverse go-to-market strategy, an omnichannel strategy, which means that wherever the customer wants to buy, we're there. So we have field sales force. We also have inside sales. We have professional services veterinarians to provide clinical support, but we also have relationships, not only direct, but with all of the US animal health distributors, the major ones anyway. And we have a network of international distributors as well to be able to fuel the demand for sales. We have a very significant opportunity and effort and activity in marketing. We present at a number of trade shows each year, where unlike the human health market, where you go and just learn about products, the vets actually bring their checkbooks to trade shows and do a lot of transactions at these events. And so I guess I could sum it up by saying that we've built the critical mass infrastructure that will not only deliver us economies of scale, but significant leverage as we move forward, as we can add many new products to our current bag without any corresponding increase in these activities. As I mentioned, we have a widespread international distribution network. We're in the process of merging together the network that we acquired when we acquired Assisi and the one when we acquired PulseVet. And we expect, as we move forward, to have all of these distributors cover all of our products. A bit about the products, right? Several of these are diagnostic products. The TrueView laboratory product, the Revo Squared MicroView, which has become the Zomedica TrueView system, and the VetGuardian remote pet monitoring system. In addition, we have the two therapeutic devices, the PulseVet and the Assisi products. All of these are pulled together by our web portal, which we call My Zomedica. Whether you're looking at a picture from a microscope, or a lab result from TrueView, or a monitoring session from VetGuardian, regardless of where that data is coming from, in every case, the device is sending the information, the data, the image, what have you, to the cloud, and then we bring it back down to whatever browser they want to use to access My Zomedica. On the right, you see what a typical customer might see that has the TrueView and the VetGuardian installed. And then we do a little subtle marketing on the bottom to show additional products that will provide significant benefits for both the pets, their parents, and the practice as we move forward. And we've been doing well with these products. We've generated substantial revenue increases. As you can see, we went from no revenue in 2020 to about a little bit more than $4 million in 2021, primarily all in the fourth quarter. And then we continue to build revenue as we move forward. It's a nice blend of both organic revenue, which is up significantly, as well as revenue from our acquisitions. It's split between diagnostic revenue and therapeutic revenue and gives us a nice balance as we're able to walk through the practice, and whether they're diagnosing an animal, they're monitoring an animal pre or post surgery, they're avoiding surgery with the pulse vet altogether, they're looking at some blood with the microscope, or they're sending the healing home with Assisi. We really pretty much have an impact around that veterinarian practice. A little bit more detail on the products. The TrueForma laboratory product provides assays that are tests that are unique because it has a dynamic range that is the widest range in the marketplace. We utilize this thing called a bulk acoustic wave sensor, which we acquired from a company that is using the exact same device in the human health side, that allows us to measure things like molecules all the way down to almost zero. Now, the way that we grow this business is we increase the installed base, we provide the instruments at no charge to veterinarians, and then we sell them the cartridges that allow them to do tests that they can't do on any other machine at the point of care. The alternative is to send them out to a reference lab, but that not only takes time, but it also cuts into their margin. And remember, we're trying to increase the profitability of the practice. The key to this going forward is to not only increase the installed base, but to also increase the menu of assays. And we expect to release additional assays this year. And we expect to increase the pace at which we increase these assays, because in January of this year, we redid our a relationship with our collaboration partner, Qorvo, so that we now have the ability and the rights to develop our own assays on our own account. And we certainly have the resources to be able to do that. We expect to accelerate the pace of new assays, digging into some of the ones on the far right of this in the coming year. The TrueView Microscope, digital microscope, was a product that we acquired. It was a fine product. We acquired it. It's in the picture on the right, the MicroView system. And then we took it, and over the last about 10 or 11 months, we've redesigned the system so that it's an all-in-one system. Everything that is needed is within the device. It features a very innovative image train with the only liquid lens available in the animal health market. You can get it in the human health microscope if you're willing to pay over $100,000 for that microscope, which is going to give best-in-class imaging as well as unique automatic slide preparation. So each time a slide is needed, instead of having the technician spend 4 or 5 or 6 or 10 minutes prepping that slide, with the TrueView microscope, you simply put the blood or the tissue on the slide, put the slide in the machine, it does the rest, hands-on time, less than a minute. This device will be providing at no charge to the account, so no capital required up front, improving cash flow, and then we charge on a per slide basis, an additional charge for those that are read by our pathologist. So this will be launching here really within the next several weeks. We also provide the VetGuardian wireless monitoring system. This was a company that we invested in 2021, and again in 2022, and again recently in the form of convertible notes. We recently exercised our option to acquire the company. We're in a diligence process now, expect to close that acquisition in the coming months. This product is unique in that it is the only zero-touch remote device to pick up the pet's vital signs. When you know that 71% of the time that a pet dies in the clinic, it's in post-surgery recovery, that's alarming. It's not that the vets don't care, they just simply don't have the staff to sit there and watch every single animal every single minute. And even if they did, they don't have x-ray vision. But VetGuardian has thermal imaging camera, has a radar camera, a regular video camera, and so it's able to pick up the vital signs of that pet and communicate them up to the cloud and back down to a browser. But even then, the techs don't need to watch the screen. Instead, the system will alert them anytime one of these vital signs either goes up or down out of range. So again, something that will improve the quality of care for that pet and certainly the satisfaction of the pet parent that gets to take their pet home. Now we move to Therapeutics Pulset, which is the global leader in shockwave therapy in the equine market, backed by lots of clinical research. It's used in human health as well. It is something that has grown to a standard of care in equine, but it wasn't used in small animals. And the reason for that was because the hand pieces, and I should say, we sell the generator for about $30,000 and then the hand pieces for $2,000. They last for 50 treatments and then they're consumable. And when they need a new one, they send it back, we reload it and give it back to them for 2,000 more. It lasts for 50 treatments and then they replace it again. The hand pieces that existed before were great for horses, but not so much for a little cat or a dog. They needed to be sedated to be used. Well, the new handpiece, the Xtrode, which was developed in late 2021, really gave us a reason to go in and acquire this company and bring it into the small animal market, which is 15 times larger. It's covered by the pet insurance for the same reason that veterinarians see an advantage and pet parents see an advantage. It's a very economically beneficial product, not only for the practice, but also for the pet. What the vet sees, if you look on the left, is an animal that's walking on 3 legs. Called the vet. Vet said, bring the dog in. And then the technician, not the vet, they got other work to do that could generate revenue. The technician spends about 3 minutes actually delivering the therapy. So a little time to get in, a little time to get out, 3 minutes time on target. And then what you see 10 days later is that same pet walking down the same aisle, only on 4 legs. And what's happening is as that device is being used, it's generating a shock wave or a sound wave, literally, that's directed at the tissue by the physics of the handpiece, which is upregulating or increasing cytokines and stimulating growth factors. So whether it's more bone morphogenic protein to stimulate bone growth, or more vascular creation, or more neural growth, in any and every event, you see faster and rapid healing. It's really made a significant mark, and we've seen small animal sales, for example, last year were up 400% over the previous year, and we continue to see growth in the current year. The final product would be the Assisi Loop. This is something that the vet buys from us for a couple $100 and then sells to the pet parent for $300 to take the healing home. It generates a targeted pulse electromagnetic field therapy, which increases endothelial nitric oxide, which reduces inflammation and pain. And this is something it's been around. It's been used in human health. The first recorded use of PEMF was Albert Einstein's cardiologist used it on him and documented it. It's very proven technology, and it's a way for the vet to involve the pet parent in the treatment of their own animal. Now, we're not done. We've been pretty happy with where we have progressed, but we still have substantial capital, almost $148 million in liquidity on hand. And there is no shortage of companies, whether they're human health companies that are looking for additional opportunities to market their products, in our case, to animals, or whether there are single product companies like Assisi or Revo Squared or PulseVet that would benefit from being part of a larger organization. We continue to be on the hunt for those as we move forward. We have the financial basis to do it. We have a very strong balance sheet, as I mentioned, $147.5 million in liquidity. We're burning about $3 million a quarter. That's been coming down over the quarters, over the last 5 or 6 quarters. And we have essentially no debt other than lease obligations. On the other hand, we are growing revenues, and we believe, a very highly leverageable set of OpEx. You might notice that OpEx is pretty steep at $11.3 million. But having said that, and this is for the quarter, having said that, when you back out certain of the one-time events like M&A related expense, and when you look at the non-cash, then we're looking at non-GAAP adjusted EBITDA of about 3.5 million. And so we believe, when we say that it's highly leverageable, we've already built the infrastructure and the leadership team. We can do many multiples of the existing revenue without a substantial increase in these other operating expenses. And so, I guess to sum up, we are an experienced team that has been executing and has a track record of being able to identify, diligence, acquire, integrate, and grow acquisitions. We have the balance sheet to be able to not only grow our existing products organically, but also through additional acquisitions moving forward. And with a market cap today that's pretty close to cash, we would suggest that now might be a good time to consider taking a position in Zomedica.
All right, perfect, Larry. Thanks for running through the presentation there. If you want to bring your slides down, that'd be great. So just maybe a couple of questions. We've got a couple of minutes here. Talk about the impact of sort of just this current economic climate and what that has sort of meant to the company here.
Yeah, so we recognize that the economy is uncertain at this point. However, from our perspective, we certainly are in no need of raising capital, which would, present a kind of a daunting challenge, I think, today. We've got plenty of capital to not only fuel our burn for many, many years, but also to take advantage of opportunities that the economic climate might be creating. That is, companies that, have a great product, they have a great technology, they want to get to market, and they can't raise the capital to do it. So we think on the one hand, as a company, we're positioned pretty well in that regard. And then we see, we obviously always have an eye towards what the consumer might be doing. Might they be skipping a well patient visit, an annual checkup with a dog that otherwise is, jumping around and seems fine? Maybe. But in our case, our products are used when the animal is sick or injured, and we don't see any pet parents failing to take their pet to the vet when one of those is the cases. It's interesting. One of the large companies in diagnostics recently posted that there was about a 3% decline in visits to practices, but they posited that it wasn't so much that there wasn't demand for these visits, but rather that vets faced with staffing shortages are having to reduce or curtail hours. And that kind of brings us right back to what's the most significant impact we can have on that vet practice, and that is to have all of our products positively impact workflow and alleviate some of the staffing issue, while at the same time providing cash flow positive and profitable results.
I think you just sort of touched on this a little bit and throughout the presentation, but sort of the additional opportunities to continue growing by acquisition. Maybe just talk about what that might look like if you were to look at additional acquisitions there.
Yeah, good. So we look for two things really. One, we look for the product of the company has to meet the 5 pillars. It has to improve the quality of care for pets, and therefore the satisfaction of the pet parents, because vets won't look at it if it doesn't do that. But then it needs to also positively impact workflow, cash flow, and profitability. We see a lot of things that meet some of those, but not all, and we pass on those. But the other thing besides meeting the 5 pillars is we look for products or companies that are at an inflection point, like PulseVet was. They had a very nice business. It was growing steadily, but it was really concentrated on the equine market. And while we expect to continue to grow that market the biggest opportunity there was to introduce it into the small animal market, which we have done really to great effect. We looked at the TrueView Microscope, which was labeled the MicroView at the time, and it was a good product. They needed to get it on the market. It was a good product. We made it a little bit better, and there it just really trumps all of those aspects. Best possible image, no errors, error-free slide prep, automatic slide prep. So we continue to look for products in those areas, and really anything that fits within that veterinarian office and can hit those 5 pillars at an inflection point where we can not only acquire it, but grow it after. Those are the things that we're interested in, and we see really a kind of a target-rich environment out there.
All right, perfect. And maybe just the last question here. You walked through kind of the adjusted EBITDA components there on the last slide or so. What is your outlook for becoming cash flow positive, sort of profitable here?
Yeah, so when you look at the actual cash loss, I mean, we report according to GAAP, of course, and that's the standard. But when you look at the actual cash loss, especially when excluding some one-time things, you can see that we're pretty darn close to cash flow positive, and we expect that certainly in the next year we'll get there. Profitability will lag just a little bit because those non-cash losses, have to be calculated when you're reporting according to GAAP. And as we built the management team over the last 19 months, the stock options that we provided them to make sure that their incentives were perfectly aligned with our shareholders' incentives. As we did that, that's an expense that you take over 4 years. And so we have a couple more years of that. But we expect to continue to grow and to get to profitability just as soon as we can after cash flow positive.
All right, perfect. Sounds good. Well, Larry, look, I think we're out of time. We'll leave it right there. Thank you very much for your time today. Greatly appreciate it. Again, I guess I'll just remind everyone out there that if you've not already signed up for a one-on-one meeting and would like to do so, shoot me an email, bloom@lythampartners.com. Visit the website, lythampartners.com/virtual. Click on the one-on-one meeting request button. Again, we hope you all enjoy the conference here today. Again, Larry, thanks so much for your time.
Thank you, Robert.